Welcome to a call to celebrate a very big day for Blencowe today. We're joined by Mike Ralston, CEO, and most of you are familiar with him, and he's going to run through today's two sets of news. One of them, which we delivered a JORC resource of 50% increase, which substantially exceeded Mike's expectations and the team. So congratulations there, Mike. And as well as this, we also have had a big win with an £800,000 investment from RAB Capital, which takes their investment total holding now to 10%, and which also adds as a specialist mining fund, a very big seal of credibility to the company and an excellent addition to our substantial shareholding list. So, Mike, I think I'm going to hand over the hosting to you so you can share your screen with us, and you can obviously choose when to share your screen.
Okay, I'm sharing screen now, which is good. Thank you very much for that, and welcome to everybody for coming in. I appreciate that. And sorry, let me just quickly get the full screen mode up. You should all be able to see that now. So I'm going to run through the presentation quickly. I know there's some people here who are listening who've probably seen most of this before, but there will be some people that haven't. So I'm going to run through it quickly, obviously focusing on the areas that we have changed and obviously the news that's come through today. So bear with me for 10, 15 minutes. I'll go through it quickly, and then we'll do a Q&A session after that and have the ability to answer questions. So where are we? Blencowe Resources is building up a portfolio. We now have two projects of sustainable green battery metal projects. And what do we mean by that? We've got two projects in Uganda. This is our company overview. We've got a board that's got plenty of experience. We've got plenty of ability to raise money. We've got plenty of ability to bring projects into production. Those are the key elements. We've got a market cap that's sitting around about £9.5 million at the moment. And we've just raised a further £800,000, as Sasha said. So we've got just under £2 million in the bank. We have a very tight share structure. I think that we're not overblown and out of proportion like many other companies. And as you can see down there at the bottom.
Mike, yeah, I can't see your screen actually. Yeah.
Apologies for that. Yeah, okay. So I was taking you through this company structure here and pointing out that really we've got a nice tight structure. RAB Capital down the bottom right has now joined as, well, actually they've always been a shareholder, but they've incremented up to a major shareholder status of 10%. And I think that's a huge endorsement for both the company and the project going forward. And we'll talk about that in a minute. The projects themselves, Orem Cross Graphite project in northern Uganda. Akila Congo is the recently acquired nickel project that we're going to be doing some exploration work on going forward. They are both obviously highly leveraged into the battery metals market, being non-replaceable materials, that is nickel and graphite within the lithium-ion battery. Orem Cross is a substantial deposit, estimated between 2 and 3 billion tonnes. We've already got a 21-year mining license. We've just announced today a revised JORC resource of 24.5 million tonnes, which is exceptional, and we're very happy with that. And we are due to complete a pre-feasibility study around about the middle of this year, with a view then to going straight into definitive study and targeting first production by middle of next year. So we are making progress. We're not standing still. We believe that we are working and developing this project within a very heated graphite market that is going to explode in the way that lithium has done, in the way that nickel has done. And our time is coming. And we want to make sure that when it does come, we're hugely advanced and well positioned in order to take advantage of that. The nickel project I'll talk about at the end very quickly. It's an exploration project. A lot of work had already been done by the vendors, who include Rio Tinto, some $15 million worth of spend. We believe that there's a VMS system there, which, if it does exist and we can find the tons of nickel and copper down there, that's going to be considerable upside potential. We are going to be focusing very heavily on the sustainability of our product and our project. The product itself, obviously, graphite as a concentrate is mainly, most of our product is going to go into electric vehicles in terms of the lithium-ion batteries. And that in itself is obviously very environmentally friendly and obviously fits the renewable story. But at the same time, we want to take the actual project itself to a next level in terms of sustainability. And we're helped a lot by having hydroelectric power from the Simba plant, which is not too far from us, as you can see in that picture. And there's a whole range of other environmental work that we're doing with ERM, who are one of the global environmental specialists in terms of making sure that we can deliver a sustainable product. And that project goes through environment into the community. We've got arrangements and agreements in place already. We've returned funds to them. We've got an education fund operating, and we're going to continue to work very closely with the community to ensure that they get benefits as we go forward. It's very important to do that. So where are we? We've got this large-scale project in a very safe location. We've now drilled it up completely to what we require for our first production. Our first 15, probably 20 years life of mine is now done. We don't need to do any more work in terms of drilling. We've done a lot of met test work to show that the concentrates that we'll produce are of a high standard. That is, they are considerably above the 94% entry grade. They have low impurities, and we're getting very high recovery. So that is all excellent news in terms of what we're going to deliver from our project. And we've got a good mix of the jumbo and large coarse flakes together with the medium and small flakes. And that will come into play in a later slide when we talk about the weighted average selling price. The mining license is already awarded. That's a big risk. In any mining project, and particularly so, I guess, in Africa, not having a license just creates one more added risk. We've got that done. We don't need to worry about that. Uganda itself is a great location. I've spent a lot of time in East Africa, and I think it's one of the best places to be. And I think it's fair to say that we've got very, very good government support. I'm actually going to be in Uganda next week, and we are having a series of meetings with various different departments and with the government and making sure that they understand where we are and where we're going with this. We've now completed a PEA last year, which was very preliminary in terms of what we looked at, and we're moving very quickly through the pre-feasibility study phase. And there are going to be changes, obviously, as we move from PA to PFS, but that PEA showed that we can deliver a very low cost in terms of the operating cost to mine, process, and deliver product to the market. And that delivered a very good operating margin. I can see there's an extra 5 in there. It's not 5,500 per ton. It's actually 550 per ton. So that's a typo. But we have got high graphite demand that is forecast to grow, and we'll be talking about that in a minute. And we are planning and working very hard to bring this project into production as quickly as possible, so that we'll be in play and very leveraged to take advantage of what I think is going to be a very hot graphite market over the next couple of years. These are some of the milestones. We acquired it only 2 years ago. It seems like we've acquired a lot longer back than that, because so much work has been done. There've been a series of drilling programs to get to that JORC resource, to infill it. We've done a lot of work in terms of met test work. We did the PEA. We acquired Aquila Congo, and we've just, as I say, put out the revised JORC resource. So that's what we've done. As you can see, there's plenty going on at all times. Going forward, we have today delivered that revised JORC resource. The final met test results are very, very close to coming out as well. And with that, we're going to be identifying offtake partners and getting the technical data sheets out to them, so that we can start to build that process of who we're going to sell our product into going forward. But by the middle of this year, we're going to complete that PFS, and we're going to start the process of a definitive study, which includes building a pilot plant in Uganda at Orham Cross. I want to get that up around about middle of next year, and we can start delivering product into end users in a bulk capacity. So around about 1,500 tons per annum from the pilot plant as commissioned. And then in parallel to that, continuing to work, we will raise capital, and we'll go and develop the main plant and infrastructure for a 2025 start. So the next couple of years are going to be busy, but we've developed a very good team, both in country and here in order to make that happen. This is the revised JORC resource. We had 16 million tons at 6% before, so we've incremented that to 24.5 million tons at the same grade. I will say a couple of things. Before, we only had indicated and measured of around about 2.5 million tons. That's now 13.3 million tons, as you can see at the bottom there, which is very, very important because you need indicated and measured to get the confidence in your mining, in what you can ultimately mine. So that is a huge step forward for us. And we actually have another 4 million tons on top of this, which is sitting in our higher grade camp load. You can see the grades in the camp load are higher than in the northern syncline. We've got about another just over 4 million tons sitting in the camp load that at some stage over the next 12 to 24 months, we can drill that and we could add another 4 million tons into this if we require. But we've got 15 to 20 years of mine life. That's all we need to do the PFS and move forward. So we want to concentrate on moving towards a production phase rather than continuing to drill. But that's an exceptional result today announced. And in conjunction with those metallurgy results on the right-hand side, which, as I said earlier, provide the evidence of a very high-grade concentrate, we've got something special here. This is what we consider to be our weighted average selling price of the 4 products that we're going to sell. I'll call them jumbo, large, medium, and small, but they're actually defined by their mesh sizes. And you can see in the middle there's approximately 35% as jumbo and large and about 65% as medium and small. And when you take the prices as forecast last year when we did the PEA, we were using a weighted average of about $1,050 per ton. At the moment, current prices would indicate that that's quite conservative, and the current prices are around about $1,200 per ton for the weighted average. And I think that by the time we get to do the PFS and complete it, we'll probably see that 1,200 increase even higher. So what it says is that the price of graphite is starting to rise. We've seen huge rises in lithium prices over the last 12 months. We've seen huge price increases in nickel and cobalt. And these are the other battery metals that are obviously important to producing lithium-ion batteries. The one that we haven't yet seen the big price increase for yet is graphite. And in particular on that small at the bottom there, where we're seeing about $700-800 per ton at the moment in terms of the small fines. There are plenty of reports out there that estimate that could go to over $1,000 to $1,100 per ton. And that makes up about 40% of our end product. So it's massively leveraged, and obviously increments there have a big impact to us. But it's all good because it just means more margin. This is where we're moving from the PEA, and we're moving to the pre-feasibility study. Perhaps I hope it's not confusing. What I'm trying to say here is these are the key performance indicators in the preliminary economic assessment. And this is what we're getting to in terms of the pre-feasibility study. So where we were looking at 13 years life of mine, we've now, because of these drilling success that we've had and announced today, looking at a longer mine life. And with that extra 4 million tons in the camp load that we can drill out, we'll probably end up going towards 25 years. So we are increasing the mine life, which obviously is going to add value. We talked about an average production rate of about 75,000 tons per annum in the PEA last year. That's just too high. We'd never be able to sell that quantity at the start into the market. We're still untried and untested. Part of the reason why we're going to be building a pilot plant is to actually send our end product into end users and to get them to pre-qualify us so that when we start, we can be sure that we're going to be able to sell all of our product into these end users, and they've qualified us to do that. And we're going to start at a lower figure of 25,000 tons per annum, which means that we'll have a lower capital requirement, which is good. Obviously, that de-risks us. But at the same time, over the first 10 years, we're going to be ramping that 25,000 up to 100,000 tons per annum. So we're starting smaller, but we're going to end up moving to a higher production level reasonably quickly. I guess a decade is not that quick, but we'll be very, very capable of moving it up quicker if the demand is there in the market to absorb all the product that we can produce. The weighted average selling price we've just talked about on the slide before is going to be a lot higher, which is good. And the operating cost per ton, we are targeting to ensure that that $500 per ton remains constant. So if we've got a higher selling price and a constant cost price, then obviously the margin should rise. And I purposefully left those bottom right-hand boxes empty because we obviously haven't yet completed the PFS. So I don't know what the EBITDA or the NPV or the payback is going to look like. But we are looking like we're going to get some good results of this PFS, and we've just got to continue to do the work. I'll just quickly touch on what the end products are used for. There are probably 150 different applications for graphite, so I could sit here and spend hours talking through them all. But specifically, there's a very specialist market in terms of the jumbo and large flakes. They have the properties that make them very important in terms of lining steel foundries as thermal sheets. Expandable graphite is used in foils for heat management, thermal management, and those particular qualities make them specialist products that, as you saw from the pricing that we were talking about before, upward of $2,000 per ton. And we've got about 35% of our product in that left-hand jumbo and large flake sizes. So that's good, the specialty products. And then the other 65% of what we'll be selling is largely going to go into the lithium-ion battery market, which everybody is very well aware of, and we'll talk about in a minute. This is where Benchmark Minerals Intelligence are forecasting EVs to go from about 15 million today towards anywhere between 100 to 400 million over the next 8 to 10 years. Now, I don't know where those numbers are going to end up. I don't think anyone does. But what I can tell you is probably the most crucial factor that determines whether we get to 100 million or 400 million EVs is really all about the supply chain and having the means by which the 282 mega factories that are currently under construction or operating can actually have product from mining operations such as Blencowe's Oran Cross in order to fill them and in order to deliver the batteries that will go into these EVs. So to be clear, in 2015, there were 5 mega factories around the world. There are now 282, representing approximately $500 billion US worth of investment. They haven't built these, well, let me put it this way. They've built them in order to produce many, many batteries for all these vehicles, and they are going to have to go and find end product somewhere. We've seen what's happened to the lithium prices because lithium is perceived as being in short supply going forward to deliver product into these factories, and ditto for the pricing of nickel and cobalt. Nobody has yet worked out that graphite is going to be very short, in short supply. There's going to be a deficit and our prices will rise as we go forward. This is what Benchmark Minerals are saying in terms of the forecast demand versus supply. It starts to get out of control, and that's purely because these numbers of EVs start to rise very quickly, and the requirement for batteries obviously runs with it. And at the same time, about 50 to 60 kilograms per battery is made up of graphite as a non-replaceable item. So as the demand starts to exceed supply, price spiking is going to happen. And the question is how much spiking is going to occur. Lithium has gone absolutely bonkers. It's gone from sort of $5,000 or $6,000 per ton to $75,000 per ton. Nickel's gone crazy. If we start to see anything like that in the graphite space, we are going to be hugely leveraged to take advantage of that. I'll quickly talk about the Aquila Congo nickel project because, again, as a battery metal, it's very, very important. We were able to pick up this project, which is pretty much next door, within 150 kilometers of Oran Cross. A lot of work has been done to date, specifically by SEPA and Rio Tinto, a lot of drilling. And there's a standout basal ultramafic unit, which contains both disseminated and massive nickel sulfides, which is exactly what you're looking for. And what we really need to do is to try and extend that nickel sulfide mineralization zone of about 800 meters to something considerably larger. So we'll be looking to do further work there. The grades are not necessarily too much of an issue. At the end of the day, one can make the grades work if you get the tons, and there's plenty of examples worldwide of hugely successful nickel operations operating at sort of 0.5% of nickel as a grade. So what we're going to be doing going forward is putting together an airborne electromagnetic survey that's going to be happening, I think, in about a month's time. And it's basically going to be flying lines to test extensions to this mineralized zone and hopefully find us new drill targets. With that, we'll be looking to go and drill. And with the new money that we've just raised today and announced today, we've obviously got the cash to do that. So it's very exciting. If we find something big and exciting here, it can be really company making for us. And these are some of the cross sections in terms of what's that. This particular cross section is actually from surface. So you can see there's some pretty good nickel hits in there, over 1%. And ultimately, it's about extending this. And then down below that at depth, around about 200 to 300 meters, there are two further mineralized systems. And that's where we really think is the heart and the guts of this particular mineralized zone. So we're going to be putting some holes in there as well, hopefully going forward, and ultimately trying to build this up to something more meaningful. So yeah, that's really what our program is for the nickel. We've got a deal with SEPO, which is very, I guess, slow burning. We wanted it to be such that we could just continue to work this in the background. The graphite at Orem Cross remains our priority, but we are going to just quietly work away at this. And at every particular milestone, at every inflection point, we can walk away from it if we don't think we've got what we're looking for. So, and we don't end up giving a lot of shares away for the project. So it's a great project if it continues to show the success that we think it can. But if it doesn't, we'll walk away from it, and we've still got the graphite to obviously focus on. And I'll probably leave it at that. I guess the final slide is really about why invest into Vanco Resources. We've talked about the sustainability, about the green credentials. I think that's going to be huge going forward. There are massive steps by funds all over the world to get more involved in companies and mining operations that are much more life cycle sustainable, have the ESG credentials than have been in the past. So sustainability is a key aspect of what we're doing. The diversification is good. We've obviously now got two projects, but we are going to be focusing very heavily on Orem Cross. And then we're hugely leveraged into what I think is going to be an ever-increasing battery metals market going forward. So our project looks good. The market that we're operating in looks very good. The location is fine. There's nothing wrong with Uganda. It's a safe location. And ultimately, the most important thing that we've got to do from here is to show ourselves moving from being a mere explorer into becoming a producer. And the companies that are producers, even at a smaller scale, are the ones that are really going to rocket up in terms of values when the market starts to give graphite the kind of attention that it's given to the other battery metals so far. And that is coming, make no mistake. So, yeah, Sasha, I think I'll leave it there if I can. And I'll probably just leave the slides up here because people may have questions relating to particular slides, but I'm happy to take questions and very happy to obviously talk through anything that anyone wants to raise.
Sure, Mike. Okay, well, quite a few questions are coming in now, and thank you for those who've submitted them to the Q&A chat. There's a little button you can press. It's on the bottom right-hand corner of the little icons, and it's the last one next to raise hand. So if you want to pop in a few more questions there, then I'll try and get round to answering them. But we've got quite a few to begin with. Mike, first of all, on a couple of questions on the investment from RAB Capital today. And first of all, will RAB Capital be an active or passive investor, i.e. will they want to put someone on the board of directors to represent them or help with finding a JV partner and possible offtake customers?
So the answer is no in terms of a board position. How active they will be, I guess time will tell. I would very much encourage them to be involved. They are a specialist mining and resources fund after all, so they've got a lot of experience, and I think that they can help us. In particular, they can help us with ensuring that our credentials for attracting other funds like RAB are obviously highlighted and underlined to the market. So yeah, we're going to be working closely with them, but I guess in the areas that make sense. Yeah, is there some other part of that I didn't answer?
Well, I think it involved, will they be helping with JVs, and will they?
Yeah, I don't know the answer to JVs. I think at the end of the day, we are going to position ourselves in this particular market with this project as getting into production as soon as possible, with a very exciting, obviously, commercial outcomes. And I believe that the JVs, the strategic partnerships, and potentially even the big takeout, all of these can happen, but they're more likely to happen if you're at that level where you are looking particularly sharp and particularly sexy, and you've got all your ducks in a row. So our job is to get those ducks in a row, and obviously where that leads to is obviously the future.
Yeah, Mike. So another question. I'll just do all the ones regarding RAB first of all, okay? And try not to spend too much time on this. So next, are RAB committed to holding their 10%, or will there be selling pressure from them?
Well, they tell me they haven't sold a single share since they became a shareholder, and they were actually one of our seed shareholders from day one. So that's good. Obviously, that's a pretty good sign. And they're saying the same thing. They believe in both the company and obviously in the graphite market and in our project. So everything they're telling me suggests that they're going to be completely sticky, as in not selling at all. Time will tell. I guess at the end of the day, everybody can be a seller down the line. But for now, everything they're telling me is that they're going to stick with us for the long haul.
Well, I could just to add further to that, for anyone that hasn't seen it yet, in the second RNS that went out today at 7:30, there was an actual statement from RAB there as well, which shows their commitment.
Philip Richards.
Yeah, exactly. So you can refer to that. So how does this put Blencowe with its cash position then, Mike? And what's the cash going to be used for? Given
Look, we've got plenty of cash now. We had plenty of cash because we raised that £2 million in November, December. And we've got all the cash we need to go through with this next phase, which is obviously completing that PFS at Oran Cross and doing this first and second phase work on the Aquila Congo nickel project. I think what we'll do at the point, so in the later part of this year, is work out what the next level is going to be. I can't sit here and tell you what that is because I don't have the PFS completed yet. But our next phase beyond that is obviously going to be moving into this definitive study, which the highlight of that is to get this pilot plant up and running. So, yeah, we've got plenty of money at the moment. So there's no capital raises coming, in the near future. It's all just about continuing to complete the work.
Okay. Let's move on to the JORC at the moment, and quite a few questions, a couple of questions which are very similar on grade. So I think one from, why has the grade remained at 6% with the increased JORC, even though you've recently drilled areas of significantly higher grade?
I think the answer to that is that we're taking a much larger resource size here. Obviously, 24 million tons is considerably larger than 16 million tons. And a part of that additional increment has come from the northern syncline, which, as you can see at the top of that table, has slightly lower grades in the high fives. So the more tons that come in from the northern syncline negate the higher grade that's coming in from the camp lode. I would, however, just make one big, large statement about the grade. It doesn't really matter because grade here, in terms of this in situ 6%, only matters insofar as how much are we going to have to put in the front end of the plant in order to get the 25,000 tons out of the back end of the plant. And because our mining costs are so low in Uganda and our recoveries are so high, it really does not matter whether we've got 6% or 7% or even 8%. I mean, it might start making a difference if we're north of 10% or 12%, but between 6 and 7% or even 8%, it really does not matter. So I don't want anyone to get too fixated about the grade. I think really what it all boils down to is what is your mining and operating cost going to look like? And we showed a number of about $500 per ton to deliver end product to Mombasa Port. We showed that in the preliminary economic assessment last year. Our continued goal is to try and ensure that 500 as close to that 500 as possible remains, so that as I say, if that became 6%, became 7%, you wouldn't see that $500 per ton becomes anything more than literally a 1 or 2% change to that. So I don't want anyone to get too fixated about the grade. Having said that, we've got another 4 million tons of higher grade camp load product, as I said before, we can drill and bring in. And that obviously could increment the grade slightly. In practice, we might end up taking some of the low-hanging fruit and mining some of the higher grade product first. But as you can see from the metallurgy there, we're looking to get a composite, which is a mix of all of the product from both of the deposits, and that's what we're looking to sell. So we're in practice, we'll probably end up mining both of the camp load and Northern Syncline together, and that's fine. We've got a very low operating cost project, and that's the advantage here, the big advantage.
Mike, actually, whilst you're on an additional 4.2 million tons at the camp load zone, I have a question on that, which is whether we're specifically looking to go after that to provide a further boost to the project NPVs, and when this might be if it is the case that we can capture more of that resource in the higher confidence categories. So potentially, maybe explain a little bit about the confidence categories and how they fit in to the economics of NPV as well.
Okay, so you start off with the inferred category, which is the lowest level of confidence, and that's pretty much all that we had in our original JORC resource of 16 million tons. I think 14 million of that was inferred and 2 million was indicated. As you do further infill drilling and you understand your resource better, you start to move those tons from inferred to an indicated, and ultimately, when you have greatest confidence, to a measured category. And so when you're coming up to a PFS level, which is what we're at now, in order to build your mining tons, that is the actual tons that you're going to bring forward and mine and put into the processing plant, you need them in the vast majority of them in the indicated and measured categories. So moving from 2 or 3 million tons of those to 13 now is a huge step in the right direction for us. And in answer to that other question, no, I don't think we're going to go out and drill the camp load at this stage for the extra 4 million tons. Adding another 24 million tons, going up to 28, whilst it looks pretty sexy, because at the end of the day, we can add another, whatever that is, 15, 20% to our JORC. It really just takes a 20-year mine life to 25. But it's as you're extending it at the back end, i.e. 25 years away, it doesn't really have that much impact on your NPV and on your project value. So it would be a distraction because we'd be spending money that we can spend better elsewhere. Having said that, ultimately at some stage, before we go into production, we might end up drilling that out. But it's certainly not a priority for us at the moment. We've got enough tons, and we've got enough tons in these indicated and measured categories in order to go forward with both our pre-feasibility study and ultimately our definitive study.
Okay, thanks, Mike. Whilst we're on the resource, another question on how much the resource covers. So what percentage of the land that Blencowe owns does this resource cover? This upgraded resource, I guess it means? It's
from the same area that we were drilling before. We haven't gone and drilled any new areas. So it still represents a very, very small percentage. It represents less than 1% of the overall deposit that's there. And it's not just about the land area, it's obviously about what's underneath. We've only drilled to 25, 30 meters, and all of this 24 million tons that we've got is sitting between the surface and 25 meters. But sitting underneath that is considerably more graphite. So we don't have to necessarily go out and drill new pits, new open pits anywhere else. We can continue to drill and go deeper where we are already with these two deposits that we've already got. There's so much graphite at Oran Cross. One can be working this project and ultimately mining it for the next 100 years. So it's about really trying to focus on where the value sits and trying to bring this into production at a time where we believe that graphite is going to really start to become incredibly sexy going forward. And we don't want to sit here and be seen as an explorer that's just continuing to drill, because it's just going to take shareholder money and just make a bigger and bigger resource, but it doesn't actually add that much more value. Where the big value is going to be added now is to show the market that we can turn an exploration company into a producing company, and ultimately position ourselves with end users, that when the Elon Musks of this world start pressing them to say we need more graphite for these mega factories, they will then come and start saying who's most able to deliver that for us. Okay, there's a company called Blencowe Resources, the Airborne project, that's in production. They're not like the other 95% of graphite projects in the world that are all still continuing to drill. They're still continuing to go sideways. We want to be seen as one of the companies that are in production and can leverage that position as the market starts to heat up. And that will be where the real value is going to happen over the next couple of years.
Thanks, Mike. Moving on now to the PFS and PEA. There's a question which is reads: the PEA was previously modelled on a 75,000 tonne per year operation, and the PFS is going to be modelled on a 25,000 tonne per annum operation. Does this mean that we can't compare the two like for like? And given this dual increase, what should we expect from the PFS?
Well, actually, just to ensure that person who's asked that question is understanding it, we're going to start at 25,000 tonnes per annum. And we're probably going to use our 25,000 tonnes as our number for the first 4 years. And thereafter, we're going to move up to 50,000 tonnes for the next 3 years. And then we'll move up to 75,000 tonnes for the next 3 years. And after year 10, we'll move up to 100,000 tonnes per annum. And for the final 10 years of the pre-feasibility study, we'll be operating at 100,000 tonnes per annum. So actually, if I go away and do the maths on what the average is over the life of the mine over that 20 years, we'll probably find that the average is not considerably different to the 75,000 tonnes that we had in the PEA. So from pure maths perspective, it'll be very similar. However, what we've done back in the PEA is we started at 75,000, and what we're saying now is the market just will not absorb, as we're understanding it with our sales and marketing consultants working with us, the market will not absorb anyone, us or anybody else, walking in and saying, here's 75,000 tonnes of end product, do you want to buy it? They will not do that. They will not buy it from us. So we need to start smaller, and we need to build up that confidence with those end users so that they understand our chemistry within our particular project, they understand our end product qualities, and ultimately, as they understand it and hopefully like it, then as the market is hotting up and the demand is starting to increase, we can be very, very capable of incrementing that 25 to become 50 and so on. So it's a lower risk startup strategy, which means that the capex required will be lower, which is good. And it just means that setting it up and getting it to work at a smaller scale will be considerably easier. But all of the upside is still there in terms of raising the production profile over the life of mine to be significantly higher. And I don't know where this is going. I don't have a crystal ball. If the demand for graphite is anything like what this particular graph here is showing, well then, by year 10, we might not be producing 100,000, we might be producing 200,000 or 300,000 tonnes per annum. And it could change everything considerably. But we are putting in our plant in a modular fashion that we can increment very efficiently, so that we can, I guess, react to what's happening in the market going forward and be able to increment the tonnes to take that into account. So I hope that's clear. I think the average in terms of like-for-like comparison, that was part of the question. I should probably go away and try and work out exactly what the average will be in the PFS in order to perhaps make it more like-for-like. But I don't think it's going to be very different, because for the back end of that 20 years, for the last 10, it's going to be operating at 100,000 tonnes per annum.
Okay, thanks, Mike. So you did start talking about the pilot plant, which leads me nicely onto a couple of questions here. The first one, if you could explain a little bit more about what the pilot plant entails, and will it only be to produce product for the offtake marketing? And do we expect the offtake marketing to help with build the pilot plant? as well.
So where we go from here is that we'll complete our final stage MET test work within the next couple of, probably 2 weeks. And then we get what are called technical data sheets for each of these end products, the 4 products that we talked about here. We'll have a particular, and it's a very technical one. It's called a technical data sheet. It's a very technical document that basically we send to the end users who all understand graphite, and they want to know the exact properties of what these end products look like. We will send it to them. They have a look at it. We've got a sales and marketing consultant who knows the market, who knows where to send it, who's looking for what. If they come back, as we obviously hope they will, and tell us that they like what they see, then they will be asking us for samples. So we've got samples sitting in the laboratories in Canada that have done this work, the MET test work for us, and we can send them samples. And then they'll go and do their own testing on those samples to make sure that the technical data sheets are correct. If they like what they see, the next step beyond that is that they will be coming back to us and saying, okay, we like what you've got. Now we want to see you actually produce this in a live scenario. So it's no longer about what you can do in a lab. It's about what you can do live. And that obviously is a huge step forward for us and for any new producer. And that's where the pilot plant becomes very important, because we're essentially saying, okay, we're going to go and produce a pilot plant that can deliver about 1,500 tons of concentrate per annum, which is a lot less than the 25,000 tons that will be starting in the main plant a couple of years later. But what that 1,500 tons per annum does is it allows us to send, you can call it bulk samples if you want, but essentially it's a whole lot of bulk samples that are produced and sent to these end users. And it's the next level of qualification for them to have a look at us and say, yep, they're not just producing it out of a lab, they're producing it out of the mine, they're producing it out of the processing plant. They understand how to separate it into these 4 products, and they can send it all the way through to wherever the end user is going to be. And they know how to do all of that. And that pre-qualification process has to be done over a number of, not just months, but ultimately over a number of years. And you build the confidence levels with those end users. And this is where graphite is different to other markets. With something like copper or nickel, you're just selling into a London metal market. You literally produce your product and off you go. That's what we're selling. But with graphite, we're selling into particular end users. And they want to understand us, want to understand what our particular project looks like and can deliver. And we've got to go through that process with them. So the pilot plant operates essentially in parallel to completion of the definitive study and ultimately the building of the main plant. And ultimately, the pilot plant will just get absorbed into the main operating plant, whether we use it at another deposit down in a different area or whether we just continue to use it as a pilot. But we'll find a use for it going forward. But what it also does is that in order to deliver product from a pilot plant, we've got to go and develop all the infrastructure at site. You can't just put a plant down in the middle of the bush and start producing concentrates, graphite concentrates. You have to obviously put the camp, the roads, the communication, the energy, the power, the water, the tailings, all the aspects of a full mining operation have to be done on a smaller scale, but they have to be done for the pilot plant. And so it actually creates, I guess, a dress rehearsal for us on a much smaller scale, much less risk, a couple of $1 million investment rather than 30, 40 million for the main plant. So it allows us to work our way into becoming a producer of graphite in a way that, as a dress rehearsal, it de-risks the process for us and for our end users going forward. So that's why we're going to be putting the pilot plant in. And as I said, we're going to be looking to hopefully get it up and running by the middle of next year so that we can start delivering end product into our end users by the second half of 2023.
Thanks, Mike. A question on the PFS, which says, this morning's RNS stated that the PFS is going to plan, PFS being pre-feasibility study, of course, and with work underway in all key areas. Could you please expand on this and explain how the PFS is different to the DFS, being a definitive feasibility study?
Yeah, so you start with a preliminary economic assessment last year where we just took a very high-level view of the whole project and we put numbers in. I mean, I'm not trying to say that we didn't put a lot of effort into it. It's a pretty thorough and comprehensive model and document, but it's at a very high level. As you go into a PFS, we're starting to take that to a much more detail. For example, the tons that we use in our mining models have to be in that indicated and measured categories. You can't just take inferred, which is what we did before. You start working out all the details around the plant. You start putting in all the people that are going to deliver it, and everything and power and energy and water and capital, and everything starts to become much more detailed in terms of where this project is going to go to. And that's what we're going to deliver as a detailed PFS model by the middle of this year. Then what you've got to do is in order to go and attract the capex that will be required to take this project into production, we need to take even that PFS to an even higher level of confidence. So we'll be honing in on each and every factor within that. So, for example, where we're going to be getting the costings for plant now at the PFS stage. When it comes to DFS, we're literally going out to end suppliers and getting actual invoices and costings for each and every part that's going to go in there. And it just takes everything to a much higher level of confidence, a degree of certainty. And that's the degree of certainty that investors are looking for when they come along. And you're asking, obviously, for a substantial amount of money to take into production. So we will be doing that in parallel to putting the pilot plant in place. Look, a lot of that work is already happening within the PFS. So it's not as if we're having to go back and reinvent the wheel, but it's just taking it to a higher level of detail and confidence. Excuse me.
Thanks, Mike. Another question on what sources of funding available to build the pilot plant, and how do you envisage this being using debt and equity, offtake agreements, or a combination of the above?
The answer is I don't know. I think it could be all of the above or any of the above, and we're going to be looking at all the different options. It's extremely satisfying to me that a fund of the nature of RAB has come in to obviously take the stake that they have and shown their interest. And I think there's plenty more mining funds, ESG, environmental and renewable funds that are going to be looking at this. They're going to be debt providers looking at it. They're going to be strategic partners looking at this. And I want to talk to all of them because at the end of the day, the moves that we make in order to create these relationships going forward are obviously the ones that are going to create the value for us. So I'm sorry, I'm not dodging that question, but I don't have the answer other than to say that we'll be looking at all of the different options and obviously picking the ones that make the most sense. Thanks, Mike.
Well, you've obviously said that you were targeting institutions and getting interest from institutions, as you proved today with today's announcement. And so you've got that. You're on the road there already. And we have obviously guided that we were making a lot of efforts in that department, and I know that you've got a lot of further plans lined up, to try and deliver on these plans you've just outlined here. So
this whole sustainability angle, Sasha, don't underestimate this as well. There's a huge amount of money sitting with these funds that has to find a pathway into renewable energy projects, and there aren't that many of them that they can invest into, particularly when they have to put a percentage into mining projects rather than big infrastructure renewable projects. So by having these ESG credentials, the sustainability, the green credentials that we're talking about here, we want to stand out and be one of those projects, and obviously the company that those particular funds that are focusing a percentage or whatever of cash towards renewable projects can come and talk to us, because again, it provides another avenue in order to get funded. And we want to obviously have as many options as we can.
Yep, thanks, Mike. So three last questions here. How excited are you about de-risking the project and having an initial mine length of 15 years? So I think it's two questions, really. You've touched upon the mine life already, but...
Look, I'm very excited. Sometimes I try to remain very calm in these conversations because I don't think anyone wants to look at me jumping up and down here, and obviously it won't go so well. But this is an incredibly good result. We could easily have gone there and drilled this and ended up getting a modest increment, and in particular getting a very, very modest increment to indicated and measured resources. And we'd probably have found ourselves back at square one, not really having the ability to take it forward into the PFS the way that we are. So it's not to be underestimated how good a result this is. And obviously with that, I'm hugely excited about what it's done for us and where it can take us going forward. So that is a big step for us. But then at the same time, when you get a fund like RAB, we've got massive credentials in the junior resource space. If they come and put money into a project, it's a big, big tick. And they are basically putting it out there to the other funds that this is a project worth investing into. And that's great for us. Obviously, anyone can see that. So, we're very appreciative to Philip and his team and for what they're doing. And obviously, it's up to us to make sure that we don't let them down and we continue to deliver the value that we say we're going to do. But yeah, I'm excited. Make no mistake.
Thanks, Mike. So how much value is inherent now in this operation? If someone wanted to buy the graphite project right now, how much would you say it's worth?
I don't know. I mean, it's a very good question. We're not going to give it away. Somebody may say your market cap is whatever it is, 9-10 million pounds. Typically people might offer you 30% increment. Is it worth 13 million pounds? And you walk away. To me, the answer is absolutely no, because the projects can really just expand and extend very quickly once people start realizing where graphite is going, what's going to happen in the prices. And I'll give you a very good example. A friend of mine here runs a lithium company. I won't say who they are because it's a listed company. But about a year and 3 months ago, he was very bleak because lithium prices were $7,000 a ton. They had a low market cap and nobody would give them any support. A year later, they've sold their project for a couple of $100 million, and everybody's jumping up and down, and they're the heroes. And look, all credit to them. They're a fantastic company and well done. But my point is that I believe the graphite market can go in a similar direction. It can, and it will, because there is going to be a shortage of graphite going forward. At the moment, it's not going through the same increment as lithium and cobalt and nickel, because there's a perception that people can turn a tap on, and because there's lots of graphite in the ground, these projects are going to start spinning out millions of tons of new graphite that can be absorbed into these mega factories that are requiring the graphite to go there. It can't happen that way. It cannot happen. We picked up an advanced project, and it's still taking us 5 to 6 years to get it into a production phase. And we're moving as quickly as anybody can move. So there's no way that anybody can just flick switches and suddenly there's too much graphite that will fulfill this demand. And as this demand supply imbalance starts to really kick in, I truly believe that the value of our company and our project, of course, is going to substantially increase. And that's what we're here to prove. And obviously, as it goes through this world cycle where the macroeconomic fundamentals start to kick in, we need to make sure that our own micro project level is also developing and advancing to keep putting value on as well. So, I wouldn't want to put a value on it now, because, we're certainly, why would you sell something at the bottom end of that curve on the left-hand side there when you can see that there's something happening on the right-hand side, which is going to substantially increment the value of your company going forward.
Thanks, Mike. Right, 2 more questions. You've nearly talked for the whole hour. Second last question. Any news on the rail exporting to port, and any comment on the higher diesel prices availability? So maybe we'll break that down.
So yes, the answer is yes. There's a lot going on in terms of the rail. I don't know if people can see that map there, just down below where it says Aquila Congo. There's a town called Gulu, and that's a regional center. The rail line now comes all the way into Gulu. So essentially, we've got to move product from Oran Cross about 150 kilometers to get to Gulu. We can put on the back of a rail truck, and it gets all the way down to Mombasa Port. So part of this pre-feasibility study for us will be to examine both road and rail options, and obviously, to assess which ones of those are going to be the best going forward. I don't know the answers as to which one is the best and which one's cheaper. I expect that rail will be cheaper, but I've obviously got to look at both of them and understand not just what's cheaper, but what works best as well. So, yeah, the rail option is good because we didn't expect that it was going to be available until at least 2025, but it seems that it's there. And by going to country next week, we're going to be in country for a couple of weeks. We're going to actually be able to go and visit a lot of these things and talk to the rail people and understand exactly where they are with these things and what we're able to do. So, yeah, it's great that we're able to travel again and actually go and start really getting into the detail. Was there another part to that, Sasha, that I didn't answer?
Yeah, there was a part on diesel prices now.
Okay. Yeah, look, I think personally, I don't want to sit here and pretend that I know where the world's going for the next 20 years or 20 months, but there's obviously a crisis that's occurring up in Eastern Europe, and that's having a massive impact in terms of energy prices, oil prices. You know, that's obviously having an impact right now. Does that mean it's going to have the same impact over the next 20 years, which is what our life of mine is, from 2025 onwards? You know, I don't know. You know, in the same way, I can't just take this demand curve and say that we're going to have crazy prices for graphite in 2040, which is the back end of our project, or 2030 to 2040. I'm not able to do that because I think it would just be far too you know, aggressive. But at the same time, we won't be taking you know, spikes in energy prices and pushing that over the full 20 years. When you do these studies, you have to take a view of what it's more likely to look like over a longer period of time and build that into your model rather than taking particular spikes in one direction or the other.
Okay, thanks, Mike. And look, you covered this before, but I thought this question came in. I'll just read it out. The lithium market has gone wild recently, and Elon Musk has also added fuel to the fire by stating that Tesla might have to go into direct mining and refining of lithium. Given that 50% of a lithium-ion battery is graphite, do you not think he's missing something? I think you did cover it, but it's quite an exciting phase.
Well, it's absolutely true, and you know, I don't know who put out that question there, but I think it's a very valid one. We've got 282 mega factories, as I said, $500 billion worth of investment. They all require lithium. They all require nickel, cobalt. They all require graphite. And if you've got all the lithium in the world and you haven't got graphite, you're not going anywhere. You've got a factory that's going to be producing nothing. So, you know, we have to understand that whilst, you know, Elon Musk, I mean, last year he was making exactly the same comments about nickel because obviously nickel was getting squeezed. Now he's making it about lithium. At the end of the day, doesn't it suggest to you that the Teslas of this world are going to end up having to go backwardly integrating into their supply chain? But it's not about whether it's lithium or whether it's nickel. It's actually about all of them. And they're going to have to find key suppliers of all of their particular requirements in order to ensure that their mega factories within those 282, and this number is going up all the time, by the way, but those producers of EVs and obviously of lithium-ion batteries are going to have to go backwards down the supply chain and ultimately into the miners like ourselves to make sure that they've got supply chains that are able to fulfill their demand. And that's where it gets really exciting for me, because at the end of the day, we're sitting here with one of the few graphite projects that can be brought into production over the next literally short to medium term. There are not that many. There are very, very few that are going into production. If anyone just doesn't believe me, go and look and see how many new graphite projects have started in the last 2 years. There are none. If there are none, there's very, very few. And I don't believe that there are going to be that many going forward in the next couple of years either. So we've got a very, very tight supply. You've got a huge demand that is building and bubbling away. And as I've said several times on this particular presentation, we have to be positioning ourselves as one of those very, very most special projects that people will come and, well, that Tesla is a good example, but it could be VW, it could be anybody will come and have a look at, because, you know, boils down to that question somebody asked just now, is what's the valuation and where do you sell? Well, you know, I don't know, if Tesla came and asked us if we want to sell it for 10 times what it's worth today or 100 times what it's worth today, everything has a price. So I believe we're going to start seeing these crazy things happening going forward. And I've seen it happen over the last 12 months in the lithium space, where literally company values have gone 10 times higher. And people are starting to see some big numbers, making these projects very, very valuable. And there's absolutely no reason to believe why graphite, and in particular Oran Cross, cannot be the same, because we have an essential requirement for something that is absolutely key to the world markets going forward.
Mike, I think that's a very passionate answer to that last question. And I think potentially a good point to wrap this up and let you get on with your evening. Just to say, you did mention that you're over in London on your way back from Uganda in a couple of weeks. So look, we are always happy to meet investors or, to meet up in person. And, our email addresses are open, and you can email myself or drop an email to the company or the Telegram or whatever you like. And maybe we'll try and arrange a small gathering. If anyone is up for that, then please do let us know. But I
support that, and it'd be nice to do this in person rather than on the other end of a Zoom call. So I'll be there for a couple of weeks in sort of middle of May. I look forward to catching up with anybody that's keen to meet up and have a chat about all of this. And keep watching, because there's going to be a lot more news flow, and there's going to be a lot more coming as we go forward. Thank you, everyone, for attending. I really appreciate that. And Sasha, thank you for hosting it. It's been a big day for us, and hopefully it's going to continue. So keep going.
Great, thank you very much, Mike. And a recording of this will, of course, as ever, be available on the website shortly. Please do get in touch if you've got any other questions. I think I ran through everyone's questions, but I always miss one or two. So please give me a shout, and I'll try and spend some time and get your answers to you. So thank you very much, Mike, and thank you.
Thank you for everyone who took the time to attend. I appreciate that.